Today I'm going to reveal to you the final results from my 1-year trading experience as a professional trader, and I'm going to show you them straight from my account so you know this is legit. So let's see how much I made or lost. So I was first started this experiment back in November 2022 after I had already been trading for over 10 years. And this all started because a friend of mine, Alex, yes Alex, I'm going to subtly call you out, has said to me that I was only profitable because I have a larger account to invest and trade with. I have to admit, my ego was a little hurt from this, but his point was that with a larger account, I have more flexibility to make mistakes and not blow up my account. So I thought to myself, is that really real? I mean, it was possible, right? He did have a point. Was my trading strategy actually legit, or was it just because I had a bigger account and could hold through more risks? Well, there was only one way to find out. Give away all my money to my YouTube subscribers and start fresh with a smaller account. You wish, right? We make a friendly bet. At that time, I had an active smaller account that was just holding a few good stocks. So I decided to sell those stocks and use that account to run this trading experiment for 1 year to see if my strategy actually worked well across all account size. If my account beat the market in the same period of time, he could treat me to the most expensive steakhouse in the city. But if I didn't beat the market, I would be on the hook for the tab with a nice steak on the line. Let's see how the trading experiment went. So as you can see, back in November 2022, I started this experiment with around $33,000. It's kind of a weird number, but I decided this was a good amount to start with because a lot of my students actually start with smaller amounts right around there. It was actually varies a lot. Some people start with even less and some with a lot more, but usually end up working. But this experiment was for smaller accounts, so here we go. You can see that on this chart, there are two lines. The blue one is my account balance that follows my proprietary said and done strategy, which takes about 5 to 10 minutes per day to set up and maintain. While the other green one is if you just bought and held ETF SPX that tracks the overall market being the S&P 500 specifically. Both of these two strategies require very little upkeep and time, so I'll say it's a fair comparison from an effort perspective. Also, I should mention that generally the SPX averages around an 8 to 10% return per year. So this is usually the standard. It makes a good benchmark to use when comparing any trading strategies because as much as what the trading gurus try to sell you, if you're not consistently making more than this with your strategy, you might as well just buy and hold SPX. It's safer and it's easier. One last thing before I start, keep in mind that the green and the blue lines started around 3 to 4% positive already because when the account was repurposed for this experiment, the account already had those small gains. In case you're wondering why. So when we first started out for the first 7 months or so, the overall market gained a bit, but not too much though, as you can see from the green line here. It's kind of just chop around in a range and end up at 8% higher. Effectively, just a few percentage more than when we first started the experiment. Okay, not bad from the market overall, but not spectacular. But if you look here at the blue line from our account, you will see that in the same time period, the account using the said and done strategy generated a 26.49% return. Comparing to the overall market, that's almost triple the amount that I would have made it if I just invest in the market. So that means so far in this experiment, even in moments where the market itself wasn't moving that much, the account was still growing much faster than the overall benchmark. Looks like we're off to the good start. Okay, moving on into the middle of 2023. All is looking decent so far until the second half where we hit our first major obstacle. The market started pulling back pretty violently, and this is a dangerous moment for our account. It's moments like this that can turn a really profitable account into a big loss account. So let's see what happens. As you can see, the market started tanking right here from the green line. It just starts breaking lower and lower. Let's just zoom in into this period so we could see it closer. So if we could held the SPX, remember this tracks the market, by October 2023, would have lost 5% of our account from July balance. That would have been a big loss in just 2.5 months time, and basically all of our gains from this big up move before in June and early July would have been wiped out completely. That's how volatile the market was at that time. But if we look at the blue line, which is our actual accounts performance, using the strategy, you can see that we actually didn't do that bad. In fact, we end up being positive 3% in this 2.5 months period, where the overall market was really struggling. From a potential negative 5% to a positive 3%, that's an 8% difference in our account value. So based on this time period and the experiment, it seems like our strategy was holding up and still being able to make money in times when most other people were losing money. This is key because it's actually in moments like these, during shorts but fast drops lower, where a lot of people blow up their accounts and lose all their gains and more. From experience, after trading for 13 years, I have learned to judge strategy based on how well they do when the market is down. That's what really tells you if a strategy is good or bad. Anyway, we have survived the market pullback, still in the green, and things are going well so far. Pretty sure I sent Alex a screenshot of my account at this time to casually flex a bit. But anyway, let's move on. After that steep drop lower, you can see that the market starts to recover and eventually takes out the July high. So at this point, this is about a year into the experiment now, so it's officially over. I've won the challenge and my free dinner, but I wanted to see how the strategy would perform when the market was actually doing well. We had already seen it outperforming when the market was flat or even when the market was down. But what about when the market was up? There's no point to the strategy if it can outperform an uptrending market, right? And I had a pretty good idea that an uptrend was forming, so I decided to let it run on for another 5 months. And in these 5 months, the market rallied a lot as I expected. In the clear uptrend, all the way into the end of March 2024, where I decided to officially pull the plug on the experiment. That's because at that time, I had all the information I needed. You can see that the SPX has total a net gain of 35.7%, which is actually an incredible return in just a year and a half. Remember, it averages between 8 to 10% return each year. So this is very high comparing to the average. So there's no way that our account strategy would beat that, right? But wait, you will see that our strategy has actually netted 44.3% at the end of the experiment, nearly 10% higher than the buy and hold market strategy. And this was the final piece of puzzle that I needed to see. This proved that even when the market was in an uptrend, the said and done strategy was able to outperform the market overall, which meant that in every overall market condition, whether it could be flat in a range, downtrended, or even uptrended, the account's said and done strategy still came out on top. So basically, when started off as a friendly challenge for a free dinner, became a full-blown experiment that tested my strategy to the fullest. It had proven to work for a smaller account size, and it proved that itself in all different market conditions. And now I feel more confident telling you about the same said and done strategy so that you can use it for yourself. If you want to learn it for free, just check out right here in this YouTube video, pop on your screen. Until next time, good luck investors.